It's the final 120 minutes of what has been an extremely choppy week for our markets. You're watching Midcap Radar on CNBC-TV18. I'm Hormuz Fatakia, with me is Vivek Iyer. Vivek, good afternoon. There was an attempt to recover from the lows for the broader markets, but that has got sold into very swiftly.
Absolutely right, Hormuz. Good afternoon. Good to see you back after a day. Like you mentioned, the broader end of the markets, the small cap index especially, as you can see, broader markets, the small cap index, all of them trading with significant cuts today. But quite a lot lined up on the show. Let's start off with the top headlines. Index heavyweights eke out some gains, but mid-caps feel the pressure, with declines far outnumbering advances. Metal and IT notch some gains, while healthcare and pharma drag.
IEX surges after it is. Emphasis has recovered from the lows of the day after some strong management commentary in its earnings call. The management said that the quarter 4 will be the best Q4 that the company has had in the last 3 years.
IEX surges after reporting good third quarter earnings, marked by 17% gain in net profit and strong rally in volumes. Management tells CNBC-TV18 that they expect to end FY25 with over 20% volume growth.
It's another weak quarter for Syngene as the company lowered its FY25 guidance to single-digit revenue growth and a flat profit after tax. The stock is down 6%.
There seems to be no respite for lenders offering small ticket loans, with Spandana Spurti seeking a shocking surge in bad loans. Stock slips over 5%.
Well, it might feel like it has been a quiet week for the index because we are just 40 points down for the week compared to where we closed last Friday. But the week has been anything but quiet for the Nifty. After the sharp sell-off that we witnessed in Tuesday's trading session, there has been some recovery from those levels. But as of now, the index still finding absolutely no confidence at higher levels and continues to face that resistance between that 23,350, 23,400 range. Same is the case for the broader markets as well. The mid-cap index at one point of time was almost about to turn into green, but then has fallen off the highs of the day and is now back down 1%, 550 points down on the mid-cap index. The same trajectory playing out for the small-cap index as well. There are plenty of earnings reactions today, plenty of other movers as well within the broader markets, and Vamakshi is here to list out just that. Vamakshi, good afternoon.
Well, good afternoon, Hormaz. Not a great day for mid-caps, right? When we look at the stocks that are declining in trade, they far outnumber the stocks that are advancing in trade. Let's take a look at some of the top losers today. Oil India is down nearly 5%. Uno Minda, Techno Electric, Jupiter Wagons, all of these counters are down and out in trade today. Apart from that, there are several MFI stocks that are witnessing some selling pressure today. Spandana Spurti, after its numbers, is down 5% at the lower circuit. Credit Access Grameen continues to slip in trade, down nearly 5%. Fusion Microfinance too inching closely towards the 6% mark. Apart from that, several stocks reacting to their numbers. Let's first pull up the list of stocks that are up and away in trade today. Capri Global Capital, that stock is up nearly 12%. Emphasis reacting to its numbers, and KFin stock has been flip-flopping in trade, but as of now is up nearly 9%. Apart from that, let's also look at the stocks that are down and out in trade after their numbers. Cyan down nearly 20%, Tejas Networks down nearly 8%, Syngene and Nippon Life India as well down and out in trade today. Lastly, let's also look at the stocks that are gaining in trade despite being in such a weak market. That includes First Source, Raymond, IEX again reacting to its numbers, and Amber Enterprises as well up and away in trade.
Thank you so much, Vamakshi, for joining us and taking us through the list of stocks that are buzzing as far as the broader end of the markets are concerned. Well, moving on, it's now time for the Growth Code, a special initiative by Grow and CNBC-TV18 designed to provide you with valuable insights and strategies to navigate the market and make informed trading decisions. Today, we'll try and demystify the gap between retail and institutional players when it comes to access to algo trading.
एल्गो ट्रेडिंग
नहीं एल्गो ट्रेडिंग तो सिर्फ बड़ी कंपनीज को फायदा देते हैं.
इट्स लाइक अ रॉकेट साइंस.
नहीं, ये सब मुझे समझ नहीं आता.
मुझे तो हमेशा लॉस ही हुआ है.
By the time I set up my algo, the market has already moved on.
Algo trading has long been dominated by institutional traders. In financial year 2024, 96% of proprietary traders used algos, compared to just 13% of individual traders. The results? Institutions made 32,000 crore rupees in profits, while retail traders lost rupees 1.8 lakh crore.
It is not necessary. In algo trading, you will be always a profitable trader. So this is pure myth. If institutions are using algorithm because they have a wide experience, they have wide data, they have different type of study material, which single person cannot go with.
Recently, SEBI proposed a set of rules that can open up safer and more transparent algo for all.
SEBI is particularly very keen with the unsolicited claimants who are claiming that they are giving the fixed rate of interest through algo trading. It should be in a very regulated manner.
For retail traders, the game is still challenging. But the new guidelines can help set better rules for a fairer chance ahead.
Welcome back to Midcap Radar. Well, the sell-off as far as the broader end of the markets continue, but as promised, we have the management of KFin Tech. Remember, the company posted a mixed set of Q3 earnings with its revenue and profit being in line or largely stable with estimates, but the margin took a knock on a sequential basis. To discuss this and the outlook going forward, we are joined by Vivek Mathur, CFO at KFin Technologies. Good afternoon, Vivek. Thank you so much for joining us. First up, give us a sense of how exactly Q3 panned out, especially given the fact that markets have been very choppy. So how is revenue sensitivity, especially in terms of a very volatile market? And overall, Q4 FY26, how is that looking?
Thanks for hosting me on the show. Overall, the market was choppy and the mark-to-market corrections were there. But I think the inflows have been very strong. And we witnessed this quarter where the net inflows actually outweighed the impact of the mark-to-market reduction. And as a result, there was a positive AUM growth across the industry. In fact, this was one of the quarters which had the second highest ever equity inflow of 41,200 crore across the industry. And KFin Tech also benefited from it. We believe that, this growth of 33% year on year in terms of revenue and EBITDA is something which is really helping us in terms of ability to invest further in terms of our tech capabilities. And with whatever is happening in terms of stickiness of SIP, and you see that the number of SIPs which were got opened in December itself, new SIPs were 54 lakh, more than 54 lakhs. And that is something where we see that the retail participation is increasing and the confidence is going up. With the SEBI's focus on, making it more affordable with 250 rupees ticket size on SIP, we do expect that the overall AUM at a country level will go further as we penetrate down. The customers or the investors of the EMCs are acquired from tier 3 cities and beyond. So while the markets are choppy and they continue to remain choppy in Jan, as long as the net inflows continue to remain positive, we believe that JFM will be really, will really be something which we have to watch out for. And as long as we get the support of net inflows, I think the industry will continue to grow.
Right. Mr. Mathur, good afternoon. Thank you for joining in. I would get an important question out of the way before we get back to business. You were onboarded as the 9th global partner to BlackRock's Aladdin provider network. Now, how big is this opportunity here? Could you share some more contours of this deal? When does the revenue start to get recognized? You were onboarded from the end of December, if I am reading that correctly. So, size of the opportunity, the revenue recognition, if you could shed more light on that.
Yeah, so this is actually a partnership which got materialized in December, and now we are in advanced discussion of go-to-market with BlackRock and Aladdin. They have 12 trillion worth of AUM across 110 global fund managers. And that's more like a front-end platform, and we provide the back-end platform where we can add value in terms of doing analytics, in terms of doing the entire fund accounting at an affordable cost as compared to other service providers. And that's in line with our strategy to grow international business. It's a large pool, and our attempt is to penetrate through an affordable cost model for the fund managers to provide them a back-end which can seamlessly integrate with the Aladdin front-end platform. So you'll see more color to it in the JFM quarter as we get engaged with BlackRock in terms of go-to-market strategy. We'll share
Understood
more
that.
about.
Right. Vivek, one more question. Hygiene check. Do you maintain your revenue guidance or CAGR of 18 to 20% on the top line, 40 to 45% EBITDA margin? First question. Second, while the international AUM has increased significantly in the quarter, however, it doesn't appear as though revenues have picked up in this particular segment. Any particular reason for this particular development?
The one is we do maintain our guidance on the revenue growth and the EBITDA margins because we are a diversified company. We are not dependent on one line of business. Although mutual fund contributes to a little more than 70% of total revenue, there is 15% of issuer solutions. There is 10% of business coming from, 11% of revenue coming from international and other investor solutions. And there is, the growing NPS business where we are growing at a pace of 3 times the new brand acquisitions of the industry. Industry is growing at 13%. We are growing at 35% plus. And we do maintain 40 to 45% EBITDA margin. You have seen that the Q3 number was 45%. And on a 9-month basis, we are still at 44%. If the markets are choppy and we do see shave off of, the AUM and the revenue, we believe that we have the ability to control cost and still remain in the range of 40%. So, that is one. In terms of, the overall expansion and margins, we do believe that this will continue. What was your second question? Sorry.
The international AUM actually saw growth, but the revenues
So international AUM has increased in Southeast Asia, and that was somewhat stagnant for the last 2-3 quarters. And this is really giving us growth in terms of revenue. And we are having new client wins. So, it takes 18 to 24 months in Southeast Asia as we have been maintaining to win a new client. But once you win a client, there is a license fee and there is a recurring revenue. And the yield in Southeast Asia is 5.1 as compared to what you get in India is about 3.6. So it's a business which at a scale will be better and far more profitable as compared to what you get in India with the ability to increase prices in Southeast Asia.
All right, Mr. Mathur, questions are more, but time's running out. So thank you so much for joining in to take us through the quarter gone by and wish you good luck for the rest of the year ahead. That is the management of KFin Technologies. Time for a short break. Get you more on the markets and specific stocks on the other side. Stay tuned. Welcome back, and we are counting down to the budget in just a few days from now, and to talk about the expectations that the building products and the housing sector has from Finance Minister Nirmala Sitharaman. We are being joined by Keshav Bhajanka, who is the Executive Director at Century Plyboards. Keshav, good afternoon. Thank you for joining in. There have always, as you count down to the budget, everybody comes out with a wish list, right, for the Finance Minister. What is the wish list that you are carrying as an enterprise, as a sector for the building products?
Good afternoon. Thank you so much for having me on the show. I think you're absolutely right. There's a wish list. And one of the items, the primary item I would say on the wish list for us is the PLI on furniture. I think, as you're well aware, all our products are deeply intertwined with furniture and with the furniture industry. And I think a PLI scheme on furniture is really going to boost the ability of India to compete globally. Today, if you compare us to countries like China, like Vietnam, our furniture exports are minuscule, whereas the potential for India to become one of the largest furniture exporters in the world is very much there. So hopefully a PLI scheme for furniture, and alongside that for real estate, I think that considering the way interest rates have moved up and further increase in the limit on the exemption, tax exemption for the interest that is being paid on home loans, I think that will help consumers, that will help demand to continue to flourish. Lastly, in line with the government's Housing for All initiative, the limit for affordable housing now should be increased from 45 lakhs, particularly for metros and tier 1 cities. So I think this is the wish list as of now.
Keshav, so PLI, tax increase as far as the home loans are concerned, and also increase as far as the affordable housing limit is concerned.
Tax
Keshav,
exemption.
give us Keshav, give us a sense of what are the challenges that the sector is facing. We understand that the last year and a half has been a little tough, especially in terms of both raw material issues, also in terms of demand trends. So if some of these asks that you have do come into the picture from the budget, how does it propel demand, and how does it benefit a player like you?
So I think you're absolutely right. There's been a challenge on two fronts. Raw material price increase has been substantial. I think in certain raw materials, the price has more than doubled. But at the same time, the demand not being as strong as it was earlier has caused an inability to price on these cost increases to the market. But having said that, I think with new launches that are expected to hit the market shortly in terms of residential real estate, demand recovery is around the corner. And I think this will help us increase volumes, help us negate the costs, and perhaps even increase our ability to pass on raw material price increases. For the last few months, raw material prices have been stable. So I'm hopeful that this trend continues. And again, with regards to the budget, I think our primary objective is all steps that can help boost demand, like I've already mentioned, that would help us and all building material related industries.
Keshav, you just mentioned lack of demand as one of the challenges. And is there also any other challenge that you're witnessing on the ground? And also specifically speaking of the higher raw material prices, timber prices have almost doubled. What's the on-ground situation right now? Have they come down from the levels that they had surged to, or do they still remain at those levels itself?
I wouldn't say that they have come down, but at least they've stopped increasing. So I think that is a positive trend as far as timber prices are concerned. And I think that, on the demand front, the new inventory hitting the market will definitely help us. But a little more impetus from the government, particularly because housing for all is a major initiative that our Honorable Prime Minister has taken. So as such, I think that this is likely to help the sector. And I'm sure that the government is going to be taking some measures for a further increase in real estate demand.
Keshav, I know you're in the silent period, but Q3 results are still expected. But would you likely hold on to the guidance? Any change in guidance that we can see? Revenue growth expected in higher than 15%. Would you be holding on to that?
I would say that there aren't any major changes that are expected.
All right, Keshav, thank you so much for joining in. Wish you good luck for the quarterly results and also for the rest of the year ahead. That was Keshav Bhachankar there for the expectations ahead of the union budget. But with that, it's a wrap on this edition of Midcap Radar. We leave you with the Nifty still below 23,200. From Vivek, me and the team that put this show together, thank you so much for watching. Your stocks the next 30 minutes.